that would be rocking the boat in a big way. It would be a de facto capitulation, really, of fiat, admitting that gold is worth 25 to 30,000 per fiat unit in the United States. That would be a huge mea culpa and admission of the loss of the value of the dollar. And Trump has, at least rhetorically, he's been talking strong dollar. So I'm not sure Trump would go along with that. So anyway, who knows? I don't think Doug or Rick Rule or you or me, none of us know if this is going to happen. So I'm not going to invest. I'm not going to make my investment decisions based on a revaluation of gold. If it does happen, I think it's nothing but bullish. There's no way that is bad for gold.
Significantly evaluating gold to $25,000 to $30,000 per ounce would signal a significant collapse in fiat currency value, essentially admitting the dollar's decline. While Trump has advocated for a strong dollar, it's uncertain whether he would support such a move. However, since no one can predict if this will happen, investment decisions shouldn't be based on speculation about gold revaluation. Gold would be highly bullish, with no downside if it did occur. Lobo Tiggre, a seasoned investor and market analyst, explains that gold has shown resilience despite market volatility and factors that would typically push it down, such as the Fed's higher-for-longer stance and a strong dollar. While gold neared the $3,000 mark, triggering potential excitement or profit-taking, its strength suggests a bullish outlook. If a sell-off occurs, it could lead to further declines, but for investors it may present buying opportunities rather than a long-term downturn. Lobo Tiggre highlights that gold has risen alongside other commodities, but increasing costs for miners such as copper and iron can impact their profitability. Some prominent gold producers have increased production and earnings but fell short of overly optimistic analyst forecasts, leading to stock price drops. This presents a buying opportunity for strong performers. Investors should focus on the best quality stocks in a volatile market rather than settling for weaker options. Before watching the video, subscribe and hit the bell icon to stay updated with our latest uploads. We'd love to hear your thoughts, so comment below.
There's two completely different directions I want to go with this, because on the one hand, today, right, gold's down today, was down yesterday, significant, not huge, but a significant turn. At the same time, Bitcoin's gone into reverse in a big way. And this isn't schadenfreude here. I'm not trying to say, oh, well, I feel good because Bitcoin's doing even worse. But I mean, it's an interesting coincidence, let's say. Obviously not. So as a market observer, I'm asking myself, what does this mean? Does this mean anything? There's been volatility in the broader indices. As you and I record, then we're seeing some grain on Wall Street, but it's been a tough week. So my wolf whiskers are twitching here. It's the market, has been volatile since Trump was elected. It's been very volatile this week. We might be at something of a tipping point. It's not a prediction. I said might, but it's interesting. We got, with gold specifically, we got within kissing distance of 3,000, a big round number like that. It could be the sort of thing that ignites a flavor of the day, off to the races, some new high because everybody gets all excited, or it could trigger profit selling, which might be exactly what we're seeing right now. And I can't tell you which it is. Nobody could. We're just going to have to watch this. That aside, that's the near term. Gold has displayed remarkable strength in the face of what would normally be tremendous headwinds. Higher for longer coming from the Fed, higher dollar. Supposedly, the inflation story has been, problematic for gold in the last couple of years, though that has changed. So there are a number of things that, should have whacked gold down recently, and they haven't. And I don't think it's just a central bank buying that's enough to explain all that. So I still actually feel very good about gold. I think it's likely to end this year higher. But if the profit taking starts triggering stops and it becomes a bit of a waterfall event, I can't promise you that won't happen. I can only say that if it does happen, then I'll be, going over my shopping list and checking it twice, looking for those opportunities. Well, sure, gold's gone up, but not in a vacuum. Other things have gone up too. And you could say, hey, great, copper's up too. Well, but, iron is up, but those are inputs for your gold miner. So, the best thing we can say is that oil is actually not kept up with the commodities complex this time around, and that has helped. So, there's a couple takeaways here. One is, if your gold producer is not seeing better margins, then you got to ask yourself, who put that gold producer in my portfolio? There's something not right with this company. The other thing though is like in terms of the big boys, we've seen some of the producers miss guidance or not even guidance, miss analyst forecasts, right? And so they've been punished for not being as good as the analyst forecasts. But those forecasts were extremely bullish. So you've got companies, and I'm not going to name names, but you know who they are, some of the big boys. They've actually seen huge increases in production and money. They're making more, but they didn't increase quite as much as the analyst expectations. And then the stock price gets trashed. That's crazy. The company is mining more, is making more, and the share price goes down because some, analysts got overly excited or something. That makes no sense. And I do see that as an opportunity. But I would still, as you say, it's a stock picker's market. If the fluctuations put the best of the best, if not on the deep discount rack, but at least, back relatively on sale again, why would I go for anything less than the best?
Lobo Tiggre exposes that political biases shape inflation and growth expectations, with Republicans anticipating little to no inflation under Trump and Democrats predicting higher rates. Similarly, views on economic growth are divided along party lines. While economic forecasts often reflect political leanings, real-world policy actions matter more. Trump has given direct executive power to budget-cutting initiatives, leading to actual spending reductions, something rarely seen in Washington. Though these cuts are minor compared to the overall budget, they mark a shift from the usual government inaction. Despite these efforts, the federal budget remains dominated by entitlements and interest payments exceeding $1 trillion. Current spending cuts, while notable, are not yet significant enough to offset inflationary pressures. As a result, the outlook remains inflationary, which supports the case for investing in monetary metals like gold and silver. Inflation also benefits commodities broadly, though selectively. Ongoing economic uncertainty and market volatility further reinforce gold and silver as safe haven assets. Now, let's shift our attention towards the interview.
And the inflation it's funny. I mean, it's sad, but it's funny. And it's so human, right? The Republicans' inflation expectations are like zero. Trump is going to, there's no inflation under Trump. And the Democrats think it's going to be 6% or 7%. And you average that out, and it's like 3%. And it's the opposite. Like, you asked them about growth. Well, the Republicans think there's going to be all this growth, and the Democrats think we're going to have stagflation or stagnation because it's Trump, right? So clearly, there's bias on both sides, right? So these expectations and what's going on, it's funny, but it's noise, right? We can't really rely on these numbers. What we can say though is that Doge has, I have to say, I was wrong, dear audience. I was wrong. I didn't think that Doge would really make any material change at all. I thought we'd see the Grace Commission on steroids, a lot of noise and thunder. But ultimately, what power would they have? They make recommendations, and in Congress, as always, does nothing. But in fact, Trump gave them power. He gave them through executive branch direct power, at least on the parts of the government where the executive can, apply its authority. They've started. They haven't waited for the committee hearings. Back in the day, they'd still be picking office furniture for what what Doge is going to do, and making sure they have the wallpaper the right color to match the Doge logo and all this stuff. We're only a couple of weeks into this, so the fact that they've actually cut anything, and remember, in Washington, a cut is a decrease in the increase in the budget. If you propose a 10% increase in the budget and they slash it to 5%, this is seen as a cut, whereas, it's actually an increase. And so for Doge to actually cut anything at all, and people are like, oh, it's just a few $1 billion. It's nothing. It's a drop in a bucket. Well, pardon me. That is more than anybody's ever done before. Like, to me, this is my metaphor for this is if you have a dog that gets on your computer and writes an essay, you don't whack the dog for making spelling mistakes. It's a freaking dog that wrote something, So this is how I see, sorry, Doge dog, It is amazing to me that this has happened. So, boy, this is a long preamble. Where I'm going with this is I'm trying not to poo-poo Doge. I am admitting that both Elon and Trump have exceeded my expectations, done more in the real world than I thought they would. But, the federal budget is this giant monstrosity. We're not touching the entitlements yet. We're not touching the interest payments alone, right? Over $1 trillion. So I don't think what we're seeing yet. Now, maybe over the course of the year, they can come up with these trillions in savings and it'll make a difference. But right now, it's not really material. The people who are saying it's a drop in the bucket, mathematically, those people are correct. The inflationary agenda is there. That's real. And the savings that might help that are still hypothetical. So takeaway from this is my outlook is still inflationary. That's very good for monetary metals, gold and silver. It's generally good for commodities writ large, selectively there. But it is good simply on the basis of the inflationary outlook for gold and silver. And then there's also just the chaos factor, the safe haven factor.
In an era of economic uncertainty, inflationary pressures, and market volatility, gold and other monetary metals remain strong investment options. While short-term fluctuations and political factors can create noise, the long-term fundamentals for gold remain bullish. Investors should stay informed, focus on high-quality assets, and take advantage of opportunities in uncertain markets. Given current economic conditions, how will gold perform next year? Do you believe government spending cuts will have a meaningful impact on inflation in the long run? Drop your thoughts in the comments. If you found this video helpful, give it a thumbs up and subscribe for more updates. Thanks for being part of our community.